What's going on, guys? Here's how I made about $650 on my trade recap today. And first, we're going to start off with, you see the account balance here. Uh, Unfortunately, we're going to be real here. We blew that account. It happens to the best of us. The good thing about it is you take a lesson from it instead of just being like, oh, it happens. So I knew what I did wrong on that one. And honestly, it was because I started posting these videos here. Based off the last video when we had like our loss or whatever, um, I wanted to come back, make it back for honestly just like the title, which is the stupidest shit saying out loud. So yeah, I honestly wanted to be like, oh, blew the, just pass my funded account. Now time to like live trade or whatever. So I got emotional about my trades, over leveraged, revenge traded. Two things that are I literally have written on a sticky note at my work where I trade in the morning that says don't revenge trade, don't over leverage. Did both of them. So it happens, got emotional. Emotions get into this shit and it's part of the game. So take what I did wrong, learn from it, don't make it again. Simple as that. So here's our trade, how we made 650 today. Pretty textbook for strategy wise. And we'll show you the reason why. So we had this 4-hour high right here, 4-hour high right here, 4-hour low right there. As we can see, it came up and swept out that 4-hour high. So we're going to break that down now. So based off a liquidity sweep, the thing that we look for here is a break of structure or inverse fair value gap after sweeping the high or low or whatever it is to ensure that it's going the opposite direction after it sweeps that, right? So what I looked for here in this case today, we had a 1-minute break of structure to the downside after sweeping that liquidity. So we had that right here. Market opened right here, so we can see we came down a little bit, kind of played in this range, and then came up and swept out this 4-hour high at like 9:35. And this is what kind of made it a weird trade for me today, and why I definitely hesitated to enter on it is because I took a trade off an order block or a breaker block, whatever you guys want to call it. I entered off of that today instead of like a fair value gap or inverse fair value gap like I normally do. It's good to use different tools like that you have in your arsenal, so I know how to use these to my advantage. I never do, but it's kind of the same thing, it's a continuation confluence. So it's all the same thing. It's just you got to look for what it actually does, and if it does what it's supposed to, then it's green light. So just like strategy here, sweep liquidity, break a structure, third confluence. And third confluence today was an order block or breaker block. We came into this, we obviously made this leg down, and then we came back up into directly in the middle, closed directly in the middle. We obviously came back up, and then we ended up closing right here though. But same thing with this one right here is we came up, came down, but we closed directly in the middle. And both of these weren't bearish closure after, so I kind of upset that I didn't take those entries, obviously seeing what happened now, but that's all hindsight bias. But same thing here is, at least I didn't enter super low like over here, but didn't have the best entry possible. So as you can see, we had a couple times where it came up to that halfway mark, went back down. So I missed this candle and I was like, oh man, it is what it is. Came back down, revisited it again, had another chance to enter all the way up here, but again it didn't close bearish in this at all. I could have had a better entry, but shoulda, woulda, coulda. So eventually went back down. I didn't want to close down here because I still wasn't confident enough. Then we revisited it again, and then I finally was like, all right, let me get in this trade. Entered at the bottom of this candle. Again, could have been up here, but shoulda, woulda, coulda. So this was my thing there. That was my third confluence. We also had equilibrium. You can't really see it, but from these range highs to these range lows, and we visited that 3 times. So that was 4 confluences for today that were going down. So obviously entered here, And then my first take profit was right here at these lows. And honestly, I was only going to have one take profit for today, just because we lost a little bit of confidence after what happened. Obviously, you know, what happened is what it is, but we regained a little bit today with a nice 3.42 risk to reward. My first take profit was right here at these lows. These are 5-minute lows as well, I'm pretty sure. Yeah, 5-minute lows there. And then this one that I had set here was honestly just because I didn't want to hold it all the way down here. I didn't really have the best confidence for it to be like that, but I saw we had so much pressure down, and I was like, F it, you know, we'll do it. Because I had it here, and then I saw we were really pushing towards that range. I was like, let me move down here. Just one more low. So, obviously, you know, would have got hit either way today. You know, we could have really dragged and went for this 4-hour low, which got hit, but at 11:30, which isn't even that bad, honestly. We could have done that, but that's super risky. So here's the trade today. Pretty simple, you know, nothing crazy. I marked out this as well because once we had this move up, I like that 10 mark, that 10 o'clock mark, you know, seek and destroy. So I was looking out for something here, and we came back up, but not up to where I entered. And then we did enter this fair value gap and went back down. And you could have, if you would have missed the initial movement, you could have got the second one, the later one. Say you got a terrible entry right there. So you put stops either above this or above this fair value gap. And you could have went for 4-hour lows. Could have been kind of crazy. But either way, a lot of market movement, especially after the election. So markets have been good. And first trade since the elections, because I took a little hiatus. I blew the count like 3 days after I posted that video, my last video. So I took a little hiatus after that, and because price action was terrible before the election, so honestly, good timing for it. So took a little hiatus here. Today was my first day back. Green day, 650 today. Beautiful. You like to see it. So yeah, there's a trade and some things I'm gonna do moving forward here. Now that we're back on taking trades and posting videos again, is not get emotional about it. You know, not try to do it for the clip or do it for the video. You know, just do it to actually learn, predict market movement. We're not trading to make YouTube videos. We're trading because we want to trade. So why let YouTube videos get in the way of that? So that's one thing I took away from that. Second is we're not going to over leverage like we did. I'm sticking to super low leverages like 250 or lower. Today we could have leveraged 500 because it was perfect to the plan. But I might do the 500, so the 1% of the account, if we have a textbook setup like today. But I only leveraged 0.05 or 0.5% of the account today because first trade, we don't want to be down the 1%. We can only lose 4. So that was the idea for it. So yeah, 250 each trade, 500 if it's a textbook. But that's how we're moving today. 650, nothing crazy. First video back, and hopefully we can get another one for you tomorrow. But we'll see what the news is for tomorrow, and if we'll even take a trade. CPI at 8:30. FOMC the rest of the day. Honestly, probably not. Depending on how the market moves, you know, if I'm trading after it, we'll see. But depending on how the market moves, probably not. But we'll keep an eye on it, and if we do come back with something, I'll let you know. But as of right now, that's the video, and that's how I made $650 today.